Good evening, student. Today I will speak the error which are not disclosed by preparing trial balance, which means when or although trial balance is matching, still there are certain errors which may exist in your accounting process at this initial stage, although trial balance matching. Now, I already explained trial balance is a statement, it's not a part of the account. Trial balance preparation is not mandatory. It is not forming any part of ledger accounts. Still we prepare the trial balance. Reason behind this, we want to check the arithmetical accuracy at the very initial stage before processing into accounting, that is prior to the preparation of final account. Now, certain errors which are still there or which exist although trial balance matching. I already explained the types of accounts in very short. Once more, there are three types of accounts: personal account, debtor, and any individual like hub, companies, firms, any municipal corporation or local government or state government including central government. If any transactions your enterprise or our enterprise has entered and extended certain service or dispatched some goods, that is sold some goods, an amount which became due, they are becoming our debtor. In our accounting books, they are having debit balance. Apart from this, other personal account like bill receivable, cash at bank, prepaid expenditure, all are having debit balance. Now, certain personal account or credit balance, example, creditor accounts, loan taken by our enterprise from bank, from other party, as well as in case of proprietorship, capital account, in case of partnership, partners capital account, they all represent the personal account. Apart from personal account, we have real account. All real accounts, they are always having debit balance. Now, in case of nominal accounts, all the expenditure and losses we debit under double entry system, and credit all incomes under double entry system. Now, under double entry system, we have the two aspects. So, whenever we pass journal entry or pass entries in the books of prime entry, that is in subsidiary book, purchase day book, sale day book, or in cash book, we always record the transaction under double entry aspect, that is one aspect is debited, another account is credited. It might be one account debited corresponding, there might be two accounts. For example, cash debit, discount allowed debit, and sales credit. Cash discount we have allowed because of cash sales. So cash receipt say 980, 20 rupees discount allowed debit, our sales credited by 1000 rupees. Now sale account credit balance and actual income is total sale 1000 less discount allowed, that will be compiled in final account. Now let us see, after preparing the trial balance, we find the trial balance is matching, and we prepare trial balance to check out the arithmetical accuracy, as well as it help us to prepare or to finalize the account, that is preparing manufacturing account, trading account, profit loss account, as well as the balance sheet. Now in fact all nominal accounts are clubbed into manufacturing, trading and profit loss account, and with different personal account as well as asset account, we prepare our balance sheet. Now all the personal account and real account, personal account having debit balance into trial balance and real account, they will be placed on the asset side, and so as personal account having credit balance will be placed on the liability side, and all nominal accounts are closed in the final account. That I will be discussing. That is the practical part. I will come up with finalization of account later on. Now today mainly my discussion is what are the errors that remain undisclosed while preparing, although the trial balance is matching. Now let us see. First of all, error of omission. Second one is error of commission. Third one is clerical error. Fourth one is error of principal. And finally, last error which may creep into your trial balance, although it is matching, crept into your accounting process, although trial balance is matching. Let us pick one after another. Omission means omitted. That is when a transaction either fully omitted or partially omitted. Now, what is fully omitted? Like cash sales 2000, cash account debit, sales account credit. This is fully omitted because, say, while recording some vouchers, sale voucher of 2000 that we have overlooked, we have not taken into consideration, or while recording 2000 sales, we are recording cash account debited, say cash sales 200 and sales account credited 200. That is fully omitted or partially omitted. Now cash debited in cash book you written to sales account, but later on you did not post it, so it is partially omitted. So when fully omitted, then trial balance will match. When partially omitted, posting was not made to the credit side of the sales account, then we will find there is a difference. While preparing trial balance, if any disagreement we find into the trial balance by opening suspense account, we should get match of the trial balance. And later on, after finding out the error, we will find that suspense account is closed. Now let's see error of commission. Now what is the error of commission? Error of commission is somewhat like omission, partial omission, like sales or say purchase 2000 from Mr. X. I written purchase account debited 200, Mr. X credited 200. I fully pass the entry with the instead of 2000, 200, both sides. So trial balance will agree, but there is a commission, like instead of 2000 I have passed entry with the 200. So trial balance will match, but the actual sales purchase figure will not reflect your the total profit loss. This is the commission. Now third, I will say the clerical error. I purchase goods from Mr. A. In the purchase debut, I have written so and so good purchase from Mr. A with after say trade discount, cash discount, I have recorded with the amount of 3000. And in the end of the day, or say in the end of the week, if the transactions are very less, while making posting, instead of credit side Mr. A, I have credited some other party's account. Say Mr. D I credited with the 3000 amount. So this posting error, error of misposting or the clerical error, like instead of crediting Mr. D, I have credited Mr. A. Instead of crediting Mr. A, I have credited Mr. D with the similar amount. So this is error of misposting or the clerical error. Next kind of error we finding out like error of principal. Purchase of furniture. Furniture will be used as a fixed asset into our enterprise for 5000 say. It should have been furniture account debit. If it is cash purchase, bank account credit, you issue check. Now instead of debiting furniture, I have debited purchase account debited. So furniture purchase which should be used into the enterprise is the capital expenditure. It should be capitalized. That means we must have furniture addition value of 5,000, which will be used longer period of time, and depreciation will be charged onto that. Now instead of doing, I have debited purchase by 5,000. So while you have debited purchase by 5,000, so in the trading account there will be a debit of 5,000 more. So your gross profit will diminish by rupees 5,000. Now we will find the wrong gross profit of our enterprise. Now trial balance still will match. Instead of debiting furniture, you have debited the purchase account. So trial balance will match. But this will, as we recorded, reflect the untrue trading profit or the gross profit of the enterprise. So this is a wrong method. Principle wrong. Principle you have doing wrong. So principle and practice of accounting, I have already explained different concepts as well as certain assumptions. I have already explained all my previous videos, although this including this not giving you any practical pictures like computation and all initial stage, but we have to get ready all these theoretical parts. Once you get ready all these theoretical parts, then practical parts become very much easy. Now, last error, I will speak compensating error. While recording, one error is compensated by two or more other errors. So, like one wrong debit or say right debit of 5,000, you have credited wrongly 4,000 say. So here 5,000 debited, 4,000 credited. Say purchase of 5,000, purchase day book entry 5,000 is right. But while posting on to the credit side of the supplier, I have credited with 4,000. So there is a credit balance, 1,000 rupees is diminished. So trial balance will not match. But while recording other entry, say sale account of rupees 2,000. So cash received 2,000, but I have credited sales account by 3,000. So that credit supplier account which diminished by 1,000, here compensated by increase of the sale amount to 1,000. So this is the compensating error, and compensating error means your one error is compensated or say get matched with another error. So compensating error is also clear. So what we have found out? We have found error of commission, a clerical error, principal error, as well as compensating error. So all these errors you must remember by heart, and next time I am coming with the preparation of final accounts, and where we will find how final account is done. Your balance sheet must get matched once your trial balance is matching. Obviously, all the error which might creep into your trial balance, that can be rectified, and rectification of entry I will discuss in my practical part. Thank you very much, student. You just go through my all previous videos so you get acquainted with the practical theoretical part of the accounting. Thank you very much.